RJ, I want to ask you just quickly about the sales. This is no doubt a hot product. I mean, I have been fascinated by the car. I love the design, looking at it for years, and people wait in line to get them for a long time. Why are sales only growing 3.3%?
Yeah, I mean, it's great. As you said, it's great to see the reaction to the products. And we see that both through the excitement of our customers directly, but there's lots of ways to measure this. And we just had J.D. Power does an annual appeal study. We came out as the #1 brand this year. We had a #1 ranking on a J.D. Power study last year. So the reaction to the product's been great. We've in the second quarter, we went through a big refresh to the product where we've now launched what we call Generation 2 of that vehicle, of the R1T and the R1S, where we made significant improvements in the product, but also took a tremendous amount of cost out of the vehicle.
RJ, the kind of summary of the earnings print was that all of the guidance previously issued was reiterated, and there's a lot of positivity around that. Very simply, loads of people asked me to ask you, can you define what modest gross profit means, or what you're defining it by in order to achieve it?
Yeah. I mean, ultimately, this has been the central focus for us as a company, as a business, is driving cost efficiencies into everything that we do, into our bill of materials, into how we operate and run our plant, and ultimately driving towards getting our production of our R1T and R1S to positive gross margin, ultimately to have the business get to positive free cash flow and profitability. So there's a whole series of steps we're making along the way in terms of improving costs, but the biggest singular step that we've made is what we did in the second quarter. We took the plant down for about a month, where we made meaningful changes to the operations, and importantly changed a significant portion of our supply base out to new suppliers in conjunction with a number of design improvements. And all of that comes together to take us to a place where the incremental contribution of every vehicle we sell is positive, and that's that's what we're driving towards. That's where we continue to guide towards for the fourth quarter this year.
In the first instance, sorry, Matt, I was just going to hold RJ to account on that one and say, in the first instance, is it just like more than zero, or single digits gross profit? I think that's the answer we're looking for.
We haven't provided a specific number, but certainly by saying it's positive gross margin, it's more than zero. Our objective, what we've guided to for a long time, we continue to maintain this guidance, is the long-term margin profile on R1 should be around 25%. And so that's what we, beyond just this fourth quarter performance that we're tracking towards, seeing how we continue to improve in 2025 and beyond, we still maintain confidence in the 25% gross margin.
And the gross profit on vehicles has nothing to do with the credits, but with credits you can make a lot of money, as we've seen in the case of Tesla. You're making double-digit millions there. Do you expect that to grow considerably? Is it really part of your financial planning?
Yeah, I think as we design the business and think about how we're operating the company, the credits environment is certainly something that's a helpful tailwind, but we don't design the company or the business or a strategy around it. It is worth noting, though, that we're seeing the credits environment really become a lot stronger as a number of existing or legacy manufacturers dial back or walk back from their electrification strategies, and we see that as further, I mean, the most important point here is it further amplifies the need for more product in the marketplace. There's very, very little choice in the sub $50,000 price range, and we see that with just the dominant market share position that Tesla has with its Model 3 and its Model Y. Customers need choice, and so this is why we're so excited about the R2 program, because we think there's a tremendous amount of latent demand that wants to buy a vehicle a lot like an R2, wants something that's less than $50,000 in that product. When it comes to market, it hopefully answers that need.
RJ, for most of the time that you and I have known each other and we've talked, Rivian has been in a position where it's been supply constrained. I wonder if that's still the case on the R1 refresh. You know, you talked last night as a big factor towards gross profit being ASP, essentially, that these higher performance spec R1s are going to put you in a wider range of price points, but that will be a contributing factor. Is there a backlog, essentially, for R1? Are you supply constrained in that sense?
I mean, it's an important point. We've with the relaunch of what we call the Gen 2 R1, it's not just cost out. We've also added some new packages. We have a tri-motor. Our new next generation quad motor is extremely high performance. That's allowed us to stretch the pricing band from our base, roughly $70,000 vehicle up to over $100,000 for our quad motor. And what that's really helpful in doing is helping to drive continual, sort of maintenance of that high average selling price. So this is something that we also continue to have confidence in. It does reflect, as you pointed out, that there's a backlog of interest and excitement around the product. And today, one of the things we're focused on is making sure that the tri-motor and the quad motor ramp meets customer demand. Those are the higher price variants. They're great for driving ASP. They're also the products that a lot of our early adopter customers really want to get. They want the best version of the vehicle that we make.
I want a quad motor. Over 1,000 horsepower with this vehicle. I think it starts at around 100 grand if I want the highest trim level, RJ. I would have to borrow money to buy that. How important is it for you that the Fed bring rates down into the next year?
I mean, ultimately, we watch this extremely closely, and the overall macro environment that we're in, an interest rate environment, it does have an impact on folks that are buying vehicles that are of this price point, $80,000, $90,000, $100,000 vehicles. It's hard for us to predict exactly how that's going to play out. We, much like in the credits environment, we work really hard to make sure that our business is not dependent upon ultra low rates, but it certainly affects anybody who's selling products that have financing associated with them.
RJ, you gave really early heads up to investors that you're going to shut down Normal for about a month for splicing the plant, right? Accommodate for R2 install. That's a long period of time. Thinking back to April, the 3 weeks, I know you're not going to tell me a number for production for 2025, but could you extrapolate out whether it's higher or lower than the base of 57,000, given that 4 week period you outlined?
The decision to put R2 in Normal was one that's going to ultimately provide us around $2.25 billion of capital savings in terms of reduce the amount of capital necessary to launch R2. So that was one of the big drivers. The other is it allows us to have really high fixed cost absorption between R2, R1, and our commercial vans in a single plant. Now, of course, to do that, it does require us, as you said, to shut down the plant for a period of time. What we've provided guidance on is to say in the second half of 2025, we'll be shutting down the plant for about a month. And that will impact production. We've guided to say 2025 will grow relative to 2024. We haven't been overly specific around the exact numbers of vehicles we'll produce, but it will be another year of growth for us.
RJ, when I was a kid, some of the cooler guys had a Scout International truck in the high school parking lot. I always thought they looked so cool. And Volkswagen is reviving that brand. You're working closely with Volkswagen. My immediate thought when I saw that story was, wow, they could just take a Rivian and rebody it as their new Scout. Is that anywhere near part of the plan, or what kind of vehicles can you build together with VW?
Yeah, the Volkswagen partnership is something we're really excited about, but the focus of this is around leveraging our network architecture, our topology of computers, topology of electronic control units, the ECUs in the vehicle, and then, of course, our software stack. It does open the door to other types of partnership and activities we could be doing with Volkswagen Group, but to date, the core focus, the singular focus is around our software and electronics technology.